Hello, fellow traders. Mark Abramsky from Forex on Dressed. This week, of course, is December the 7th to roughly the 12th, 13th of 2014. We'll look at the euro at the very first. We always go through our weekly analysis, and that's what we're going to do now. There isn't really much to say. The euro should continue down, not simply because of the fact, that it's falling, but simply because of the fact, that the dollar will likely rise a little stronger over the next few weeks, as a result of incredibly stellar economic data coming out of the United States last Friday, where we saw an increase of 320,000 jobs, which is actually quite good. So we should expect that the United States is actually the number one sort of uh, I suppose, shining light right now in a beacon of lousy economies. It's probably the least lousy still. And not that any of its infrastructure problems have disappeared, because they haven't. However, it is showing positive signs of growth where interest rates will have to be considered, you know, uh, as a particular point where they'll have to raise them likely over the next month or two, very small increments. I mean, you might be talking about 0.5%, but and that's because the Fed is still carrying 4 trillion in debt, so it can't really raise interest rates too high. And of course, the dollar isn't at a stage yet where it's of a concern to the Federal Reserve, and that probably won't happen until between the 92 and 96 level, which we're at about the 89 level in the dollar index, so still not really a factor yet. But you can see the euro is likely to continue moving down through this trend line that's been in place since about October 2007, as it moves down towards probably the 0.5 around the 1.200 area this week, maybe even a little further towards the 1.1882 area. You can see there isn't much stopping it, once it passes that, other than the 1.1638 level, and then down towards the 1.0831 area, and after that, not much at all towards parity again, but that won't happen for a number of months, perhaps even measured in years. 2016 maybe we'd be looking at, but you can see that over the next week or two we may see the euro continue to move down. The franc weekly, once again, it should move up towards the 61.5 of the fall, going way back to 2011. We should at least see the 61.85 up here, which is what is that particular, because it'll rise with the dollar index, of course, being very similar to the dollar index, and that's at the 99.58 to 65 level there. So we should easily see that. What will happen to gold? Hard to say. It's sort of been pulsing around in this area, hasn't yet broken through the minor trend line that has been holding it down here. As the dollar rises, you would think that it will fall, but however, we see that it seems to have put in a minor bottom here. And you can see that basically it is making a bit of a triangular pattern here. Not that that is signaling that it's going to break up from that pattern, but it might. Once again, it's all based upon order flow. And likely most people are expecting gold to fall further now, so we may see it yet rally up towards this medium trend line, which is up around the 1292, the 1300 area. Don't be surprised if that happens. As we move forward, oil continues to stay low. It had risen up towards the 70 mark, but has since fallen back down to the 64 actually. As it moves back down towards the 62 area, it may continue to fall down as the dollar strengthens too. Once again, the 56 area is certainly a major problem area. So we'll keep an eye on this particular area for any particular signs that we may be able to go long. The Nikkei 225 just continues to move higher as the Japanese yen does. No surprises there. The Nasdaq once again continues to move higher. All stocks are still a buy. I mean, obviously they're going to continue to go higher now, especially in the United States, where things are supposedly perceived as rosy. I mean, really, there is no other market, where you'd want to be buying stocks out of at this particular point anyway. So more money will flow in towards the stock indexes, at this particular time. And of course, that's good. The Nasdaq, the S&P, and the Dow are all pretty much indicative of that particular scenario that I was just describing of the cash flow, which is leaving other countries, that are having more infrastructure problems and are now entering the markets of the United States that way. That's not to say we can't see a correction, but still definitely a time to buy the dips. The Great Britain pound finished the week a little lower. We may see it yet move down towards the 23.65, which is still a couple hundred pips away, but it has been sort of sideways for the last 3 or 4 weeks. And I do expect this to kind of continue. There's no reason for it to fall heavily. There's no reason for it to rise heavily. But I mean, once again, in this particular area is where we should see the pound contained over the next little while. The Aussie dollar seems to be moving down towards the 8049 area. Not much stopping it from hitting there over the next week or two. So as you can see, that's kind of a key area, and it's continuing its downtrend. The Canadian will probably rise up a bit as the U.S. dollar strengthens, and as oil basically weakens too. So once again, we should expect commodity currencies to weaken a bit too, as one of the key commodities, that being oil, is also weakening. As we look lastly at the US dollar, Japanese yen, I told you it was easily going to go to the 120. In fact, it not only went to the 120 area, it went to the 121. You can see the next major area of resistance is around the 124.08. I would be careful here, ladies and gentlemen, chasing the US dollar yen at this particular height. It could very easily pull back to the 115 from here. If so, we would expect a correction in some of the indexes around the world too, if that was going to happen, as they're highly correlated. So we'll be watching for that to happen. But once again, there's not much upside left versus maybe a sizable correction over the next 3 or 4 weeks towards the downside. You can see the parabolic rise that it's been taking, far faster and far stronger than I'm sure even the Doge had anticipated. However, the dollar is still strengthening, and it could conceivably go much higher even yet to the 124, maybe even 127 area. There's no telling, when it might slow down as a result of the Doge, of course, engaging in quantitative easing too. But here is where I'm very concerned about buying into. If you're going to take positions at all, take very small ones so that if there is a sizable pullback, you can enter again, lower. Obviously it's not likely to fall much below the 115 area, but that's still 600 pips away. So you could just take small positions and build into it over a series of weeks, as it continues to go higher. This is obviously one of the main trades, along with the Euro US dollar short and the US dollar franc long over the next little while. So that wraps it up for our weekly analysis. And as we look to the news, we might as well continue on here. There's not much up until roughly Wednesday, when we get into the New Zealand Reserve Bank statements, which should maybe force the Kiwi down too against the US dollar. And the rate decision, I don't think it's going to be affected at all. Once again, they can't necessarily drop interest rates too low as a result of inflationary effects right now. But you can certainly expect that the Royal Bank of New Zealand, Wheeler, will talk down the currency as much as he can. So we may see the New Zealander move, a fair bit down this week, maybe 200-300 pips, as it maybe follows the Aussie down too. Thursday we get into the Australian, after the Chinese loans, which basically also affect the Australian dollar because they're the number one trading partner. We get into employment change, and we get into the unemployment rate. So once again, I don't expect any major surprises here. However, once again, the Aussie dollar is still poised for further downside. So technically and fundamentally, we know that the Royal Bank of Australia also wants to see it lower, a lower rate for the Aussie exchange rate. So that also will be a factor. As we continue to move down, the Swiss National Bank rate decision won't change. ECB, if anything, will have an opportunity to push the euro down even more with its monthly report. Shouldn't signify anything other than the deflationary effects that we've seen up to now. And then we go to the retail sales, which should actually maybe improve slightly. So once again, pro-US dollar. And then that takes us into Friday, where we don't really have much other than the Michigan confidence, which should print a little higher than 89, especially with that release of data that we saw last week, although everything is about a month delayed still with the heavy increase of jobs. I don't expect any surprises around consumer confidence. And that brings us to the end of the week and likely to the end of our trading session for the year, folks, although I'll update you with another video at that time. So anyway, that brings us to the end of this week, and stay tuned as I continue to update the site on a regular basis.